Recent analyses from credible financial sources project Bitcoin's price in 2026 to range widely between $75,000 and $225,000, driven by institutional adoption, ETF inflows, and technical patterns. Investing Haven forecasts a bullish outlook for 2026, with prices from $80,840 to $151,500, potentially stretching to $200,000, supported by strong support zones around $70,000 to $80,000. CNBC reports diverse expert predictions, including Standard Chartered's revised $150,000 target and BitMining's economist forecasting volatility between $75,000 and $225,000 amid rate cuts and regulatory shifts. Institutions like Bitwise highlight massive inflows projected at $420 billion into Bitcoin by 2026, underscoring growing confidence as a hedge against inflation, with nearly all supply mined. Swan Bitcoin CEO anticipates a new all-time high in 2026, aligning with bullish technical forecasts from experts like Peter Brandt targeting $200,000. While some warn of pullbacks to $70,000, the consensus leans toward upside potential from post-2025 consolidation and broader capital base.
Major banks and financial institutions have issued varied Bitcoin price forecasts for 2026, primarily clustering around $150,000 to $175,000 amid institutional adoption and policy shifts. Standard Chartered revised its target to $150,000, down from $300,000, citing slower ETF inflows and the end of aggressive digital asset treasury buying. Bernstein analysts reiterated a $150,000 forecast, emphasizing sustained institutional demand despite potential volatility.
Forecasts table. Institution 2026 price target. Key rationale. Source: Standard Chartered. $150,000. ETF slowdown. Revised from $300,000. Bernstein. $150,000. Institutional demand persistence. Maple Finance. $175,000. Bitcoin-backed lending boom, greater than $100 billion.
These projections assume favorable Fed policy easing post-May 2026, chair transition, and regulatory clarity, though risks like inflation shocks could pressure prices lower. Goldman Sachs recently issued a broad crypto outlook implying upside potential toward $200,000 in bullish scenarios, focusing on market maturation.
Which banks predict Bitcoin above $150,000 in 2026? JPMorgan provides one of the key forecasts above $150,000, with its volatility-adjusted Bitcoin to gold valuation framework indicating an upper limit of $170,000 for 2026. Maple Finance projects $175,000, driven by the expansion of Bitcoin-backed lending surpassing $100 billion. While Goldman Sachs issued a major 2026 crypto outlook tied to bullish $200,000 Bitcoin scenarios, specific numerical targets remain implied through broader market maturation forecasts rather than direct pricing.
High Target Bank's summary. Bank/institution. Predicted price. Basis. Source: JPMorgan. $170,000. BTC to gold valuation model. 1-2. Maple Finance. $175,000. Lending market growth. 3.
Few traditional major banks explicitly state targets exceeding $150,000 as of early 2026, with most like Standard Chartered and Bernstein aligning at or below that level post-revisions. Higher projections often come from investment firms or analysts within banks, emphasizing ETF inflows and macro easing.
JPMorgan bases its $170,000 Bitcoin target for 2026 on a volatility-adjusted Bitcoin to gold valuation model, assuming continued capital inflows similar to commodities like gold, constrained supply from ETF accumulation, and improved liquidity conditions amid institutional adoption.
This framework factors in Bitcoin's role as a store of value comparable to gold, with upside if volatility normalizes and on-chain activities expand through Wall Street integration. Goldman Sachs' 2026 crypto forecast implies potential for Bitcoin above $200,000 in bullish cases, resting on assumptions of Federal Reserve rate cuts, a more favorable regulatory environment under evolving U.S. policy, and broader market maturation with crypto's integration into traditional portfolios.
Key assumptions comparison. Institution. Core assumptions. Target price. Source. JPMorgan. BTC to gold model. ETF supply constraints. Liquidity boost. 2. $170,000. Goldman Sachs. Rate cuts. Regulatory easing. Institutional maturation. 4. $200,000 plus implied.